Sponsored by Chartered Financial Strategies. You are now watching Tax Bites.
Welcome to another episode of Tax Bites, and today is a real-world tax preparation issue. It's very common for us in the tax professional industry, but the value is so understated. I think it's worth showing what we can do that can be trivialized and undervalued. And any information I'm showing here is a mock-up of real world, but it's not real client information. No names, social security numbers, and has been divulged. So just know that. But what happened was I got a 1099-R from a client. They had a large lump sum rollover where they actually received the check paid to them or written to them. They then took a portion of that, a small portion for themselves, and then put the rest in an IRA within that 60-day window that the tax law allows. Now, this is what the form would have looked like when it came to them. It would have been, gross distribution, taxable amount, a normal distribution from an IRA. He's of the right age for that. Uh, so he's got as far as the IRS is seeing on this form when it gets to them, the IRA custodian is saying you got it, that we gave them $150,000. And as far as the IRA custodian understands, that's what happened. They don't know what happened with that check after it left, their office. So the client has the obligation to prove and or report on their return different things happen. But right now, as the IRS would see it, and if you just hand documents over and don't question it, this is what the tax bill comes to be: $150,000 in wages, $30,000 in self-employment income, along with that $150,000 IRA distribution. You are looking at a $30,000 tax bill is what you're looking at. So I happened to notice the 5498 that showed a rollover. A 5498 is a different kind of IRA form, and it showed a $140,000 rollover, and I saw a $150,000 IRA distribution. I just knew my clients go, well, you don't have $140,000 lying around. Let me ask the question. They didn't tell me they had rolled something over. They didn't tell me how it had happened. I just looked at the two forms and go, something's off here. Hopefully good. I call them and they explain exactly what happened, and so I'm going to prepare the return differently. Now, I'm not showing you how to do it on the return. I don't want to get into that kind of stuff. Probably never will on this channel. I don't want the misrepresentation of I told you how to do it and it didn't work, largely because there's more than just, oh, click these buttons and you're okay. So I just plugged it in for math purposes to show you the math, not how to get on the return properly. And so now you have a $10,000, $150,000 distribution, $10,000 is taxable. Now you have a $4,000 refund, or almost a $35,000 swing in tax benefit to the client because of the tax preparation skills that we know. And that's largely unvalued both by the client community as well as by the tax professional community. And one additional value I want to tell my client is because of the potential for that 1099-R report the way it is to create a letter, because the IRS just says, I don't care, I want to check anyways. I'm going to advise them on how to pull the appropriate statements and so forth from that new IRA, showing when the money got in, and statements from the old one, hopefully when it got out, and showing that there's a 60-day window in between. Okay, or no more than a 60-day window between. And that prepares them for the documentation needed if the letter comes. It becomes a very quick response, already laid out, ready to go. So that's the value of tax preparation that is real world and happens. So I hope it's been insightful, valuable, and some bit of a learning opportunity for those out there. And so please like, subscribe, and have a good day.